Hi, welcome back to my channel where we break down complex NetSuite concepts into simple and fun to understand steps. In today's video, we'll dive into the concept of fixed rate allocation within NetSuite. If you're managing expenses across different departments or projects, understanding how to allocate them effectively is crucial. We'll cover what fixed rate allocation is and how it differs from dynamic allocation, and then we'll do a walkthrough on NetSuite to see how we can set up fixed rate allocation. Let's get started. Let's start with an overview of fixed versus dynamic allocation. In NetSuite, expense allocation can be done in two primary ways. So we have fixed and dynamic allocation. Fixed allocation involves distributing expenses based on predetermined rates or percentages. This means that no matter the changes in activity or volume, the allocation percentages remain constant. Dynamic allocation, on the other hand, adjusts based on actual activity or other varying factors. It's more flexible and can be more accurate, but requires more setup and maintenance. In the next videos, we'll see how we can leverage statistical accounting for dynamic allocation. But for now, our focus will be on fixed allocation, which is ideal for situations where expenses need to be consistently allocated in the same way over time. Now, what exactly is expense allocation? So I'll let you pause the video to read the blah blah, but in simple terms, it's the process of distributing expenses across different segments. In NetSuite, segments can be your class, department, location, subsidiary, and can also be to other accounts. This helps in accurately reflecting where resources are being utilized, making it easier for management to track and control costs. In NetSuite, expense allocation can be done for various types of costs like rent, utilities, or any other expenses that needs to be shared across multiple areas of the business. Some of the applications of expense allocations can be allocating office rent across multiple departments based on square footage. It can be sharing admin expenses among various business units. So by using fixed allocation, you ensure that these costs are split in a consistent and predictable manner. Now, let's take a look at a concrete example. We have received a vendor bill for rent expenses for the month of June. We want to allocate the costs of this vendor bill across our departments. Now, we have two ways to do that within the fixed allocation method, even distribution and odd distribution, and we're going to look at each one of them. Let's start with even distribution. So we have our vendor bill for $10,000. When we create it on NetSuite, we'll leave the department field empty. Now, we want to allocate this amount equally across 4 departments. So let's say we have a PS department, HR, marketing, and an operation department. So what we want to do is take this 10,000 and split it equally across those 4 departments. And this is how even distribution works. Next, odd distribution. Same example, we have our vendor bill for 10,000. No department is tagged onto the vendor bill, and we want to allocate this amount across our 4 departments. However, this time, we want to assign different weightage to each department. So for example, 80% of the amount should go to the PS department, while 5% should go to the HR department. So what we do is, we use this odd distribution method, and this $10,000 in this example will be split according to the weightage that we have set. Now let's get into the practical part, which is creating the fixed rate allocation in NetSuite. We have 3 main steps. The first one is we are going to create the allocation schedule. The second one is we need to make sure we have some transactions into the system. So what we're going to do is we're going to replicate the vendor bill that we have seen in our case scenario earlier. And the third step is to run the allocation. Let's go on to NetSuite. So step 1, creating the allocation schedule. To do that, we go to transactions, financial, create allocation schedules, and we are going to give it a name. So let's say rent allocation 2024, for example. Sub is going to be US. Frequency, it's how often do you want this allocation to run. For me, I want it to run at the end of every month, but it can be a one-time thing or every 2 years. I want it to run end of August. And this is how long do we want the allocation to run. Do you want it to be a forever thing or maybe just for the next 6 months? So you can specify that here. And in the allocation mode, you can define whether it's going to be a fixed or dynamic allocation. So in this video, we're going to focus on fixed allocation. Next, in our subtab, so we have source and destination. Source is basically from which accounts do we want to allocate the amount from, and destination is to which accounts we want to allocate those amounts to. So we are going to use our rent expense account. In name, I'm going to put any, can be any vendor, department, unassigned, location Boston, and class unassigned. Next, destination. So we can allocate from one account to another account, but in our example, we want to allocate to the same account. We just want to split it across different departments. So that's why I'm going to select the same rent expense account that I have selected in the source subtab. But here I'm going to select different departments. So let's say we have PS. Let's use HR. I'm going to add marketing as well, rent expense. And I am going to add, rent expense and oops. There we go. For the weight, so odd distribution, so let's say 80%, 5%, 5%, and ops is going to be 10%. And I'm going to tell NetSuite that those values are percentages. It can be absolute values or percentages. Once you are done, we can save the allocation schedule. So that was step 1. Now, step 2, let's create a vendor bill. To do that, we go to transactions, payables, enter bills. Of course, you can create a PO from that, generate your bill, but we are going to create a bill directly. So let's give it a reference. Vendor can be AA Consulting, and the location is going to be Boston. So no item, but we're going to add expenses. So we're going to choose the rent expense account. No department will be tagged, and we're going to create a vendor bill for $10,000. Once done, let's save our vendor bill, and that is step 2. Once we have created our vendor bill, we can run our allocation, and there's 2 ways to do that. We can go to our dashboard and add it in our reminder, or we can also go directly to the allocation schedule page. So both are going to redirect you to the same page here. Before we run the allocation, let's take a look at our income statement. So let's open this up. Right now we have, so I'm going to split it by department. So this is the 10,000 that we have created in our vendor bill, and it is assigned to no department. Now let's run our allocation. So I come back here, click on enter, and now NetSuite is going to do its magic, and it's going to generate your journal entry. And this is the journal entry that has been automatically generated, and you will see that NetSuite has split the 10,000 that we had earlier across the same account, but across different departments and according to the percentage that we had set. So now if we have a look at our income statement, I'm just going to refresh it. The 10,000 that we had earlier has been split across the different departments that we had, and based on the weightage that we had set. And that's it. You now know how to set up fixed expense allocations in NetSuite. So by using this method, you can ensure that your expenses are allocated consistently across your business. Thank you for watching and see you in the next video. Bye!